From a 44 crore rupee net loss in the second quarter of last year, Bata India has posted a 37 crore rupee profit this year. This was also the first quarter with new CEO Gunjan Shah at the helm. The gradual relaxation of COVID restrictions and Bata's expansion drive during the pandemic have helped the company bounce back. Bata has a target of 500 franchise stores by 2023. So where are things headed for India's largest footwear retailer? What is Gunjan Shah's blueprint for growth at Bata? Joining me now to discuss all of this and more is the man himself, the new CEO of Bata, Gunjan Shah, in his first TV interview. Gunjan, many thanks for joining us here on CNBC TV18, and here's wishing you and everyone at Bata a very happy Diwali, albeit a belated happy Diwali, but thanks very much for joining us. Before I get into the more long-term aspects, Gunjan, let me start by asking you about what the last few months have been like for you, from selling biscuits to selling shoes. You took over at a time when we were seeing the worst of the COVID pandemic through the course of the second wave. July to now, what's the experience been like for you?
No, thanks a lot, Shireen. First and foremost, to wish you, the CNBC team, as well as the viewers, a very happy and belated Diwali and a great new year ahead. Thanks for having me over. I think, I think it's been a roller coaster ride in a way. Foods, as you said, was benefiting actually from this kind of a phenomenon, as you have heard many times. And I think we had obviously a very tough time in Bata during the last 18 months with 2 lockdowns in between. But the good things are that, things are opening up. And as you see from the results, we've started seeing some recovery on that.
What confidence do you have in this recovery being A, sustainable, B, getting stronger? What is the demand visibility at this point in time, Gunjan, as you observed market trends?
I can speak about the quarter gone by, Shireen, and the way I see it is that, the first month of the quarter, July, we saw a decent amount of bounce back, and the months after that, which is August and September, have been only better. So I would say that, with a large base that we have, with more and more stores opening, I would say that this is, as of now, in the medium term, reasonably sustainable from a consumer demand recovery. We would want to see how the full festive season pans out, which is how this quarter is. But the signs, as we've seen in July, August, September, seem to be pretty promising.
Okay, so the signs are promising, and the hope is that demand revival will continue. But Gunjan, let's talk about strategy now and where you actually see things for the company going forward. Your predecessor had charted out a strategy of survive, revive, revitalize and thrive. And what we have seen through the course of the pandemic is decisions to try and optimize costs. So there has been significant emphasis on cost reduction. There's also been an effort to push online sales. As you look at where things are for the company, how successful do you believe you've been on each of these parameters, and what do you foresee in terms of the road ahead?
So I would split this, Shireen, in 2 parts, right? I think the immediate term strategy / priority is going to be to make sure that, we get Bata India, right, back to pre-pandemic performance levels. As you would see from the numbers, even at the quarter gone by, there is still some way to go on that. But I'm sure, as I said, hopefully, COVID notwithstanding, we should be able to recover that soon, right, rather than later. Going forward, I think we will not only continue that strategy, but even reinforce it on multiple fronts. I would say a few vectors in a brief manner right now. One is to make sure that, the portfolio of what we offer consumers, right, is something that evolutes in line with consumer demand. We have seen a longer-term trend which got even more accentuated, right, which is towards casualization and sneakers. And that is something that we are assiduously working towards. There's some initial signs of progress and success that we see, but there's a long way to go out there, right? So that's going to be one big pivot. I think also we see that the Bata brand equity pervades across the length and breadth of the country and across pop strata. And that's where I think there's a large opportunity that stands in front of us, whether it be in terms of franchise and therefore smaller towns, tier 3, tier 5 largely, or through even multi-brand outlets. So I think the distribution footprint expansion is going to be one big lever. The third piece that I would say is going to be digital footprint. And I think there is a lot of scope. We made good progress. We've seen very good results even in the quarter gone by. And even there, I think there's a long way to go. We are currently with our omni-channel strategy, which is digital interface with consumers in all forms. is at about teens kind of contribution. We want to see that go into 20s pretty soon.
Okay, there's plenty that you've packed in there, Gunjan. So let me address each of those issues individually. And let's start by talking about what you said is the distance to be covered yet between where you are and the pre-pandemic performance. Now, let's just pick up on the margin picture, because if I were to take a look at your margins, they're currently at about 19%. Pre-pandemic, we saw them at about 26 to 27%. Do you believe you have the levers to go back to that kind of a run rate, or what should the street be satisfied with or expect?
So, just to be clear, we don't give forward-looking statements, Shireen, but obviously the desire and endeavor is towards ensuring that we get back not only top line, but also the profitability. So, as I said, COVID permitting, I think we should start seeing a trajectory towards that. And I think the last quarter also, we've had a lot of, as you mentioned at the start, we had a significant amount of effort towards cost reduction during the 18 months that COVID pandemic lockdown had. Some of them we are hoping will sustain going forward, which has given us a lot of learnings, and that should aid this entire journey, as I just mentioned.
So let me pick up on the cost optimization issue, because I know that there's been a lot of effort in terms of vendor negotiation, vendor consolidation, even on account of rental negotiations, etc. And the last number that I saw, that you had savings of about 100 crore rupees on account of each of these items. Is that likely to be sustainable? What more can we expect in terms of cost reduction, cost optimization?
I'm sure. I don't think we will see the similar quantum from what we call as occupancy, which is rentals that we pay out, right? With business coming back to normal, and obviously we need to be fair to our partners from a real estate perspective. But as I said, we would like to make sure that in this period we have got a lot of learnings. Which are the right profitable stores? Which stores are basically that can be located, or we have already done work on that front, which can be basically located better or sized better, etc. And that should give us lingering benefits, which will aid the recovery, in addition to obviously, top line coming back, as well as work that is there on the margin front and mix.
Okay, let me then address the issue of portfolio. And you talked about the casualization, or the move towards casualization and catering to the sneakers market. This is going to make Mangalam, our in-house analyst, very happy. He's a sneaker fanatic. But what can we expect on that front? What's the next steps? What are the tangible next steps that you intend to take?
See, the way I see it is there are multiple, how do you say, consumer streams that are running on this entire casualization word, right? The way I see it is one big piece is sneakers itself, right? So sneakers, which are not only used for sports, but they're used for even all occasions now, more and more so. And we see this while we are seeing obviously a very strong bounce back on formal footwear, on fashion footwear, etc. And obviously we'll try and participate in that. But simultaneously, there is a longer term trend that consumers will prefer to extend their comfortable footwear usage to even as when basically lockdowns open up across the country. So that's something that we want to participate in. So that's one big piece. The second big piece is also something that we call as 2-mile fashion, right? A lot of people are now used to a certain kind of footwear which is to be used for within a radius of about 2 miles, right? Their grocery needs, for let's say for example morning walks, etc., etc. And what does that require? That requires easy to use footwear, washable footwear, etc., etc. Right? So there are multiple levers to this, right? And I see us participating in various ways. Power being obviously one big brand that I see from a sports category. We've got North Star, where we have done extremely good work, merchandise, and we are seeing good results, right? So I think the casual range and the demand for us has actually gone up by almost 40%. And I see this momentum something that we want to fuel further as we rightly participate in this category.
So when you say that, you want to fuel the momentum in this segment further, what is that going to mean exactly?
So it's going to mean a few things. One is first and foremost a very expanded merchandising, right? So we plan to see average merchandise to grow up over the next few quarters by almost 40% in this sector alone, right? Now, that can be across multiple forms, as I said, whether it's in terms of casual footwear, whether it be in terms of a new product launch that we have done called Floats, which is doing extremely well, right, which is open footwear, and whether it be in terms of sneakers under brands like, Hush Puppies, North Star, as well as Power. So multiple forms. I think one is first and foremost is basically in terms of merchandise. The second piece is to do with making sure that consumers connect to merchandise from Bata on this front. And I think one big initiative that we have just piloted and we are expanding in the next, I think about 6 to 12 months, we should see a massive expansion, is something called Sneaker Studio. So that's basically making sure that, it's exclusively the entire sneaker range is displayed in a certain coherent form across all our stores in all the major cities and metros. And that is something that we have just piloted a few stores in a metro, and we plan to expand that in this quarter and obviously explore that in the year coming by. So that's the second piece. Then the third piece is to do with making sure that we communicate to consumers. And there's going to be a large marketing campaign that will roll out from this.
So let me pick up on that last point first. What's the ad spend as a percentage of sales currently? And as you try and drive home the message more aggressively, what should we expect on that front?
So frankly speaking, actually in the last 18 months, we had crimped down on marketing spends, and rightly so. Conserving cash was the priority. But now with business showing reasonably promising signs, we plan to start investing. And in fact, we have already started investing towards the end of Q2, the quarter gone by and going forward. So we plan to make sure that this comes back to normative levels as time goes by. But a large campaign was rolled out in the quarter gone by, and we will see more of those along with stuff, as I said, on sneakers, etc.
On that note, we'll take a break, but we continue our conversation with the man at the helm of Bata, Gunjan Shah, when we return. Welcome back. You're watching the CNBC TV18 CEO Centimeter. We're in talks with the CEO of Bata India, Gunjan Shah, on the strategy for growth. Let's talk about expansion, because you talked about store expansion, specifically on the franchise store side. If you can give us what the plan is. I know you have a 2023 target in terms of hitting 500 stores, but as you try and enhance your distribution and your penetration, especially across the tier 2, tier 3 and tier 5 towns, give me a sense of where things currently are and over the next 12 to 18 months where you expect them to be.
Right. No, so I think this year we should see, highest ever additions in franchise stores. We see a lot of penetration potential, as I mentioned at the starting, in terms of, tier 3 to tier 5 towns. This will be primarily championed through franchise model, and we are seeing an exceedingly good response. I am pretty confident, as I said, of at least the target that I have set for ourselves, right, which is about 500 stores and a 30% store mix contribution from franchise over the next 2-3 years. I think we are on track for that. There will be a lot of action on that front. In addition to that, we also foresee basically a lot of expansion through the multi-brand route, which is our distribution vertical. I think there is a lot of potential that is there in that to be unlocked. There's a lot of assiduous work that's happening on that front, and we've seen some good results in the initial signs that we see. So that is also
So if you can just
add another about 500.
Yeah, if you can lend a little bit of color, Gunjan, on the multi-brand outlet, because you said that there is a strategy in play there that you hope to leverage on. A little more color on that, as well as on what you intend to do as far as further pushing your online sales are concerned.
Yeah. So first on the multi-brand side, I think what we're seeing is that we have made a progress. I think even during the lockdown period of the last 18 months, we've seen some decent amount of groundwork. I think the time has come to start reaping the benefits of that. We've moved from about 450 towns to about 900 plus towns now, right, over the last 2 years. And I see another, there is enormous potential. I think in the next year, we should be adding another about 500 towns. So that's from a multi-brand perspective. This will be aided with obviously expansion of distributors and the outlets that go along with it. There is also a lot of investment that's happening from a merchandise point of view, as well as making sure that we are able to bring it alive from a Bata brand perspective in these multi-brand outlets. So that's on the multi-brand distribution point of view. And we see obviously the contribution inching towards teens as well as into the 20s as the period goes by going forward. From an online perspective, we've got 3 channels in which we digitally interface commercially with our consumers. One is obviously our own in e-store, which is bata.in. We also have obviously very good plans as well as partnerships with the marketplaces. And lastly, but I think something that we have pioneered and done really well is something called omni-channel, where we basically offer endless aisle and therefore home delivery from our stores, where a consumer can scan QR codes. I think all of this combined together has moved to teens in terms of contribution. And as I mentioned earlier, I think with exclusive merchandise, customized towards the consumer profile that lands up on digitally, we should be looking at this also moving into a higher percentage contribution for us and leading our growth.
Right. I want to understand from you, Gunjan, in terms of where things now currently stand as far as raw material inflation is concerned, how much of a worry is that? How much of a challenge is that? And what can you possibly do to be able to offset that? We've also seen a GST rate hike coming in for shoes under a ticket size of 1,000 rupees. So how's that impacting sentiment as well?
So it is a reality. Both the factors that you mentioned, raw material prices, especially in synthetics and plastics, right, raw materials, as well as basically the GST, right. We are waiting for the notification on that front, so I'll reserve my comments there. But however, on raw materials, we are working proactively to try and ensure that we balance the portfolio right, and therefore, along with obviously making sure that we sustain some of the cost efficiency measures, we try and ensure that the margin profile gets protected over the medium term. But it's a reality, and that's something that we are working towards.
Okay, so how much of a pressure is that putting as far as, just being able to maintain your margin profile is concerned? And what could you possibly, I mean, you've already given us some sense of the costs that have been taken out and the need to go back to, investing, whether it's on ad sales or in store expansion, etc. So do you really have much leeway, much headroom to be able to offset the kind of cost hikes you are likely to take? Or likely to have to take?
So it's a how do you say, it's a dynamic environment right now on that schedule. So but as we speak, what we are working on is multiple vectors, and price hike being one of them. But however, we also have, because of a broad play of our portfolio, we've got a very wide variety of mix, and therefore mix can also enable a lot of play for us. So that's something that we are also working upon. And simultaneously, there are various ways in which we look at basically, let's say, material substitution, looking at more cost-effective material usage, etc., as well as looking at other cost-effective measures to try and make sure that we balance out this entire play. But as I said, it's a little dynamic environment. There are certain materials that are seeing extremely high inflation, but then there are a large part of our portfolio which is not seeing as much.
Okay, so what is that going to mean then in terms of what you intend to do as far as the portfolio is concerned? If you can break up for us, what is the share that you're getting from premium products currently? Where do you believe you will be forced to take price hikes given the cost input hike that you are seeing?
So, so there will be 2-3 ways in which to cut this slicing of the portfolio. I would say that about 25 to 30% of our portfolio has got a reasonable amount of plastic/synthetic that goes into it. So that is where there will be a significant amount of cost pressure. As I said, we'll play across the portfolio to try and manage it, right, from a pricing point of view, along with the other levers that I mentioned, right. In addition to this, we also see a large amount of premiumization play. So we are working towards making sure that while volumes do recover, and volumes are leading our recovery, on a channel to channel and therefore a mix to mix basis, our ASP or our premiumization direction continues, and therefore we get higher ASPs as we go forward with our premium products.
And what will the portfolio mix mean also in terms of the two constituencies that you're addressing, the men's line and the women's segment?
Actually, coincidentally, the downturn that we saw actually hit both the lines almost equally, right? And therefore now the bounce back, both in terms of formal footwear, as well as in terms of fashion footwear, is showing an equal bounce back, right? Along with obviously schools as and when they open up. So I think we are seeing the balance of male versus female largely remaining static. So it's, female contributes to about 40% of our volumes and about 30% of our value. So that continues broadly in that same ballpark ratio. I don't see that changing much going forward.
Okay, you said, Gunjan, that it's going to be a continuation of the strategy that had already been set in place by your predecessor. In fact, it will gather more momentum in many areas. So let me ask you about Project Thrive, which is the company's efforts to try and localize as much as possible and reduce the dependence on imports. What will that mean going forward over the next 12 to 18 months?
So basically, the point is that I think it's a larger project, right? And which is basically trying to look at how are various ways and means in which teams can get together functionally and collaboratively, right? To try and basically look at the entire value chain of a product or for a revenue stream and look at what kind of cost can be extracted where, right? And it can also mean investing in a certain area so that you can extract much more from another area. So I think all of this combined together is what is Thrive in my mind. And product localization is just one piece of it. So I think that combined together, as I said, will take a lot of effort, but the fruits are there for the taking and should help us mitigate this price inflation that we were just talking about a few minutes back.
So let me end then by asking you, Gunjan, how confident do you feel about the road ahead, especially, at least as far as the next few months are concerned, given the fact that you have seen things improve over the last few months, just both in terms of not demand as well as performance. How confident do you feel on being able to deliver on both those fronts?
So we as I said, each of the months in the quarter gone by, we saw successive improvement. It is showing up, and therefore, we are looking at the festive season as well as this quarter, and even going forward with reasonable optimism. As I said, it's notwithstanding any kind of a third wave, etc., in COVID, but with the kind of vaccination that is going on, with the kind of confidence that the consumers are showing, I would say cautious optimism would be the best word right now.
Okay, cautious optimism. It is, as far as the next few months at least are concerned, for Bata. But Gunjan, it's been an absolute pleasure. Thanks very much for joining us here on CNBC TV18 to take us through where things currently stand and, more importantly, what the growth strategy and the growth blueprint looks like for the company going forward. Appreciate it. We will, of course, take a break here on CNBC TV18 on the CEO Centimeter. Don't go anywhere. We're back in a moment with a lot more.